Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. First I want to jump in, take a look at the hat, Blue Line Futures hat. We have them on our website. You can buy them under the Blue Line Futures Gear tab. On the mobile, it's a drop-down. Bottom last option is Gear. If you're a client, contact us, give us a call, whoever your main contact is. Tell them to send you one. We're happy to send you one as a client. Hats, got another option for a hat. We also got the polos. So check them out online or contact us and have us send you one if you're a client. If you're not a client, open an account and ask for one. They're complimentary if you are a client here. So don't forget to contact us about that. Well, let's jump right in here. Overall, stocks are higher. Tech is leading the way. You got Amazon, CRM, some of the bigger names. Berkshire Hathaway is moving pretty good. Let's jump in on the heat map real quick and see that first. Amazon up 3.5%. Look across, so Google, some of the usual suspects, all up. Netflix, CRM, Oracle, Adobe. Again, Berkshire Hathaway, it's had a pretty good week. The news, Warren Buffett into the metals space, into gold, really helped lift gold to start the week and get the metals rocking. You're actually seeing copper rally pretty big today too, so a lot moving out there. If you take a look down though, some of the banks, those usual suspects, JP Morgan, Bank of America down, energy not doing so great, Chevron's down pretty sharply, 3.5%. So again, a mixed board, tech leading the way. And let's take a look here at the S&P. If you were trading this overall, hope you survived the quick crash of August 2020. This market, the S&P earlier this morning, did trade down to about 33.60, coming back up. This was after basically achieving a new swing high intraday after the bell, and then it faded out pretty quickly. But what we see here, know your targets. I mean, these sell-offs, if you are trying to fade this move at all, these sell-offs are so quick. Take a look at the S&P. There's a tremendous amount of support building. This trend line here from the low in June, and then you got a shelf that's building here at about 33.25. Yeah, it should be achieved. But listen, there's going to be a tremendous amount of support. This would be a great area to buy. We thought we might have an opportunity to see that as an area to buy here today, but market recovered pretty quickly. But let's take a look at what's moving this. This is Amazon. Amazon is moving out above a range. You can see this trend line support moving out above a channel. It's not a new high in Amazon because you did have that July 13th spike here, which brings you a resistance up at about 33.45. But this is moving out above where Amazon has actually spent a good amount of time in consolidating. So Amazon leading the way, arguably a breakout here. And then Apple, I talked about Apple yesterday on CNBC. Bull flag over the past couple of days, over the past week, bull flag breakout. You got tremendous support now at that closing level into this low, 450, 452. Don't want to see it close below there. So, ultimately, I mean, these are the stocks moving the market. These are the big heavyweights. Apple, about 7%. I mean, you take Apple, Amazon, Netflix, or just Apple, Amazon, Microsoft, Google. You're talking about stocks that are about a quarter of makeup of the S&P 500. And again, Apple, about 7% of that. So when they move, the market's moving too. Know what they're doing. So here again, now look at the broader market. Take a look at the broader tech. Nasdaq, new record high today, holding out above the previous record high, 11,270, 283, 11,283 previous record high. Out above there pretty well here today, holding out above it. So, again, it's not an easy one to fight. Hope you're not trying to fight this. We like stocks longer term. We do think they are exhausted up here, but guess what? We got a ton of life here in tech as it's breaking out, as I showed you. Amazon moving out above its range. Nasdaq, new record high. Apple, CRM, all doing some great things for the market. Now, take a look intraday here in the S&P. We had this quick sell-off. When it hit this low, what did it go into? Well, this is over the last week, a tremendous amount of volume is traded. Right into this 360, 33.65, 33.70 area. This was a quick spike into here, and it bounced right back up. We're right back up to this high here. So, again, a lot of support in the market below. We're really hoping to see somewhere in the 33.25 range. After seeing some of the strength we've seen over the past week to 2 weeks and how the market just chewed right through that February 21st area. A lot of strength, but a lot of support down at 33.25. Thought we might have a chance to see it today. Didn't happen. Market right back to the highs. So where is there some weakness though? Well, the Russell small caps. Russell 2000, take a look at this. Lower highs going back to last week. You had that big spike to 1600. lower high, and lower highs here. And now you got some weakness in the Russell 2000. What are we looking at? Overall, again, same market last support, but if you back this thing out a bit, there is quite a bit of resistance. Take a look at it. Let me make that a daily chart. Quite a bit of resistance going into the sell-off from February still here for the Russell. It's stalling in there, really staying in the middle of its range. If you look at this daily, really staying in the middle of its range where it's closing. But you got support now out above the previous recovery high in June. That comes in 1540. Got 382 retracement from what we've seen here, this low end of July. That brings the 382 retracement 1545, 1550 area. So a lot of support here in the Russell in this area. If you're trying to fade something, you're selling rallies in the Russell. But if you're looking for that down move, 1545, 1550, really maybe all you're going to get. Again, this market, the stocks are in a strong uptrend. We do think they're exhausted. We're trying to strategically find some potential ways to see if this thing can come back in. But overall, we're long stocks in a portfolio basis. We think this thing is going to continue to go higher. But there are hurdles. There's exhaustion here at these levels. And, it's the elections down the road here. You got a lot going on. I mean, is the economy really recovering? You're starting to see some solid data. Today, pending home sales, the home sales in general have looked pretty decent. I mean, retail sales going back to last week, very strong number. Some record components within that. New York Empire State Manufacturing, though, yesterday missed. So we're still getting very, very mixed data out there. And again, because of that mixed data, because of the central bank liquidity out there, you think this leg could be a little bit exhausted. So we're trying to find some ways to maybe capitalize on the rallies to see this thing come back in a bit. But again, you can't continue to fight this. This is a very strong uptrend. So if you are fighting, I hope you're long your portfolio somewhere too. So remember that. Now let's take a look back at the chart here. Overall, again, here is that Russell, a lot of support in there, 1545 range as that comes in. Now, crude oil is one that has not been able to extend its gains out above recent range. We rolled into the October. October is front month now. Got this trend line in the October contract from the lows. It's creating a bit of a wedge pattern. 200 to 100-day moving average overhead has not moved out above that in the October contract. And then you got the gap, which we've stuck its nose into that gap from March 6th, but really hasn't been able to extend above there. We saw that with the September contract, obviously very similar patterns there. But really, again, this is some exhaustion up here. We want to find a dip to be long crude oil, and we're just not going to get it. But if we start getting below this trend line here, that could be what may be a technical catalyst. Bring it down into somewhere here, 39 bucks could be a big area to look at. Let's take a look at gold too. Now, this is a 30-minute chart here for gold. Don't want to chase these rallies. You got to be careful when this market. We always say, when everybody's screaming for gold, you don't want to be the one chasing it. It's when you capitalize on gold you already own. Well, gold did pull back, give you the opportunity to be a buyer in it, at least positioned in some way or another. Today, it becomes easy to get excited. Gold's get out above 2,000 very, very steadily. What is it running into? It's running into where it broke down last week, exactly the breakdown point where it failed to here, but it's recovering. Back with the stocks, recovering back very strongly. Again, one thing I hit on earlier in the conversation is they're saying Treasury Secretary Mnuchin is talking with the Republicans and the Democrats, trying to piece together additional stimulus measures, and that has been helpful. Stimulus talks in the U.S. Certainly, helping copper here, but it's China stimulus was a big catalyst yesterday, bringing copper. This is low, and to finish off with here, copper, a little bit of a bull flag after this run, and it's moving out above what was some solid resistance in copper. Now, don't get too excited yet. $3 is a big, big area. This was a big resistance that we couldn't get through last year. Really, it was the high last year in copper, but $3 is still going to be some resistance. It struggled back here in the middle of July. But it's Chinese stimulus. They didn't really add much on a net basis, but the headline stimulus was, I think, had a huge impact for sentiment that they're willing to continue to backstop the economy. You don't want to see the industrial production data fell shy of what they were expecting last week. Obviously, the U.S.-China trade tensions continue to be an issue. What's going to happen with tech? There could be some surprises there. Market's not pricing that in. A lot of uncertainty overhead. I mean, and again, that correlates into why we think the market is a little exhausted here, but the market's not worried about it. But again, the fact that China just introduced stimulus yesterday was really a savior for the fact that they had talked about previously pulling back measures or just only doing targeted measures. So the broad stimulus, and even though it's a smaller net amount of only, I think, 25 billion, just had a big, strong impact across the board. But when markets want to go higher, they go higher, and it is just a risk on. So you got to be careful if you're trying to fade it. Path of least resistance higher on risk on assets, and there remains that. But one thing we finish off here, I did not put a chart up on, and I'm sorry about that, are the bonds. The bonds are holding very, very well. Trying to recover from last week's sell-off. They're still at the very low end of the range, but keep a close eye on those bonds as they're holding up fairly well. If they're holding up strongly, it may not be buying into the fact that the S&P snapped back so quickly from today, the early part of the move today. Will we finish up here? That's the question. But give us a call. Our trade desk is here, 312-278-0500. We look forward to hearing from you. Talk about our gear. Give us a call if you want some of our gear. We look forward to hearing from you. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.